Welcome to Web3 and Me, presented by FLOLiO. I am your host, Jeremy Weber, and today I'm going to be discussing 10 lessons that I've learned from the last year of trading NFTs. You notice that my normal co-host Dan is not with me today. He is on vacation, so I am flying solo for this one. Before we get going, just a reminder that nothing that we do here is financial advice. I'm going to give some outlines for what I've used over the last years, lessons that I've learned, mistakes I've made to try and help you get better at NFT trading. So please like the stream, subscribe to our channel, and then head over to FLOLiO.com and link your account, download our browser extension, use these tools that we've been developing to help you with your NFT trading. So this is going to be my first, like I said, solo live show. Going to do a little happy hour tonight. So I'm going to jump right into the lessons that I've learned over the last year. So the first one, which is really important, is don't be willing to risk more than what you have to lose, okay? So a lot of people get over leveraged in NFTs. They put far too many eggs into one basket, and then that really clouds their decision-making around their portfolio. You have to be very honest with a lot of these choices that you make, things that you're buying, whether you want to buy more, sell, whatever it may be. And if you have too much at stake and it's going to really affect the quality of your life and it's going to negatively impact your decision-making, you've probably put in way too much to that one decision. So keep that in mind. I used to go to the casinos a lot when I played poker for a living. I would only walk into the casino with how much I was willing to lose in that given night. So do the same thing with your NFTs. If everything goes to zero, you're going to have to live with that. If things go up, that's awesome, but just keep that in mind, okay? Tip number 2, and listen to that, I've learned number 2 is keep your wallets secure. Have multiple wallets for different types of transactions. If you have some high-priced NFTs that you want to keep in cold storage for the long run, never touch that account if you don't have to. An important thing to do is be more paranoid than what you think is necessary. So there's nothing wrong with that. I've seen some people talk about how they have their seed phrase written down on a piece of paper and it's hidden in a safe, or they have it in like a safe deposit box, like whatever you need to do to stay safe there. An important part of that, like I said, is having these multiple wallets. Have one for cold storage, have a hot wallet that you mint from, have sort of an intermediate wallet if you want. I would say probably 2 to 3 wallets is going to be good. I've seen some people say like up to 5. That seems a bit excessive for most of us to keep track of. But if you're getting really serious about it, it may not be a bad idea to go to that extreme to keep your assets safe. Another important part with wallet security is do not click unsolicited links. People are going to be in your DMs on Discord, on Twitter. If people are sending you unsolicited DMs and there are links in those, just don't click it. It's not worth it. And along that same line, if you are making a trade with someone or you are accepting an offer or listing an NFT, check and then recheck the website URL before you're connecting your wallet to that. I've seen a lot of really sophisticated phishing schemes that look like the address to a site, whether it's through an email or a DM. And all it takes is one bad decision and one malicious link, and you are just drained of all your NFTs if you don't take the proper steps. So, it's great to have a hardware wallet for sure, but don't get complacent if you have that hardware wallet, okay? If you have a Ledger, if you have a Trezor, be smart about these things. Don't click links that you shouldn't be clicking, all right? 1 second. Okay, so we have those first 2 out of the way. Don't risk more than you're willing to lose and keep your wallet secure. Now, on the buying and selling front, this is where people want a lot of information, and this is where your money is made. So an important thing to keep in mind is that you have to be comfortable resisting FOMO. FOMO is a very dangerous thing, especially if you're in Twitter, Discord. As people see the prices of their NFTs go up, they get more and more excited. They pump out more tweets and more messages about it, and that can lead to a lot of people feeling that need to jump in right after them, even if the price has 4, 5, 10x from where it was, just a few hours before. So nothing goes straight up forever. We've seen this over and over again, whether it was Bored Apes, Azukis, currently Goblins. These things that go up at a really fast rate inevitably have some sort of pullback. So if you've seen a parabolic graph where it's just like a straight line going up, don't feel the need to jump right into that project. Odds are something is going to happen in the future to bring that project back down to maybe a more reasonable price point. Okay. So be comfortable resisting that FOMO. On the opposite side of FOMO, we have FUD. So FUD, for those who don't know, fear, uncertainty, and doubt. An important thing to keep in mind with FUD is that not all criticism is necessarily FUD. And I think that's something that people get mixed up a lot, is if you say anything that isn't super positive about an NFT project, everyone just accuses you of FUDding it. However, there's a big difference between legitimate criticism and just randomly spouting off at the mouth because you don't like an NFT project. So keep that in mind. Like if you see someone whose opinion you respect and they have something, that is against what you believe for a project, don't immediately dismiss it as FUD. Try to get more information from them. Why do they have this point of view? Maybe they see something with the project that you're not seeing because you have too much invested in it, which, like I said at the beginning, is not being over leveraged. Okay. So keep that in mind. Not all criticism is FUD. Another thing that you need to do is create some sort of buying and selling process. Now, when it comes to buying an NFT, some things to keep in mind. Do you like the art? Do you believe in the team running the project, whether they're anonymous or not? Do you vibe well with the community? That's a really important one. That is what got me into Bored Ape Yacht Club at the very beginning. Was I got along really well with a lot of the people in the Bored Ape community. And because of that, I felt comfortable buying that as my first NFT, which has turned out pretty damn good so far. So those are three things. Do you like the art? Do you like the team? Do you like the community? And one of the bigger lessons I've learned recently, especially when it comes to things like Goblin Town and these other NFTs that are memes, are don't fade the memes. It is a very meme-driven market and community out there. And if something has the potential to be a meme, there's a decent chance that it could see a run-up. So from the jump, there was some writing on the wall that the Goblin Town could have been a really good pickup. It came at a time where the market was down terribly. We were literally on our way to Goblin Town. And just so happened that this meme NFT kind of popped up out of nowhere. And now it's gone on a run that has a lot of people totally unsure of their process because it has been pretty crazy. So those are a few things to keep in mind when buying. Don't fade the memes. Find out what you like about the project. On the selling side of things, a few things to keep in mind here. Number one, it's maybe a good idea to sell an NFT pre-reveal or pre-airdrop. So playing the rarity lotto on a project before it reveals is usually a losing proposition. Not many projects reveal and then have their price go up. We've seen it recently with Pixin. We've seen it in the past with Mutant Apes. We've seen it with Azukis, with the beans. So that is definitely something to keep in mind. If you are claiming some of these airdrops, you're getting in on the mint of a project and it has a delayed reveal, it's usually in your best interest to sell it before the reveal. From an expected value standpoint, and I want to make sure that people are making that right decision as well, because that's going to help you make more money in the long run. From an expected value standpoint, you're probably better off selling pre-reveal than hoping to spike a rare, because that's like a 1% chance. Okay. So you're probably going to be missing out on a lot of money long term. Then you can also wait till the price dumps after reveal, take the profit that you made, get back into that project if you really like it. Okay. There's nothing wrong with that strategy at all. On the airdrop side of things, this is definitely something that we've seen repeatedly with Bored Apes and Mutant Apes, where, we just had the land sale, for instance. Selling a mutant or an ape before the land sale at its peak was going to be the winning play. You maybe would have gotten a coda if you held the land, but that was only a 10% chance. And we knew that going into it. So keep that in mind of if there's an airdrop coming up, whether it's just going to be, randomly sent out or a snapshot taken, consider unloading, one of those assets into that airdrop hype, because there's going to be a good chance of making some money right there. Now, along those lines, we also have some biases that come into effect, and I want to talk about those next as far as overcoming cognitive biases. We did a full episode on this a couple months back, so you can go and pull that up. But for now, I'm just going to talk about 3 biases that really impact your buying and selling decisions when it comes to NFTs. First off is confirmation bias. That's just going to be, you're looking for things that confirm your previous mindset, previous decision making. Okay. Something important to keep in mind is just because you were right about something, were you right about it for the correct reason? Or did it just so happen that it went that way, but your decision making was wrong? Something that you really need to focus on. Hindsight bias was ability to see, oh yeah, I knew that was going to happen. Like right now, I knew the goblins were going to go up, but I didn't do anything about it. So those are two biases right there. But in my opinion, the most important one that's going to hurt you as an NFT trader is going to be anchoring bias. And there are two ways that this impacts you. So anchoring bias essentially is that you get anchored to your first piece of information or your first opinion about something. For NFTs, that's usually the price point that people either get in or get out at. So on the buying side of anchoring bias, looking back and saying, oh, well, I saw this project when it was all the way down at 0.1 ETH. Now it's at 1 ETH. I'm not going to buy into this because I didn't buy it before. So therefore, it's a mistake to buy now. Even if new information came out, is a mistake. Okay, so something really important to keep in mind there. Don't let the previous price of something dictate whether or not you still get into that project. This has been a really tough one for me to overcome over the last year of, oh, well, I saw apes when they were at 5, so I didn't buy as many because I initially saw them when they were lower, whereas that cost me a lot of money. So something to keep in mind there. Just look at every decision from a buying standpoint, irregardless of the previous price of it. Don't get anchored to what you saw before. Also, on the flip side of that, when it comes to selling NFTs, if something has gone down in price, that doesn't mean you should hold out hope that it's going to go back to where it was before. It is really, really hard to peg buying at the bottom and selling at the top. So more often than not, if something peaks and it starts to come back down, it's okay to sell on the downtrend. I've had a couple instances in the last year. I've sold a lot of NFTs. I think I've had 2 times where I've sold the top of something, and it was out of dumb luck for the most part. So really be aware of that. Don't try to time the market. Don't try to get super lucky. Make a good decision and don't get anchored to these prices. All right. So from there, we also have, in relating to profit, is take profit on the way up. Nothing goes up all the time, like I already mentioned. And also, no one ever went broke taking profits. So be aware of that. Take profit as it goes up. Don't be afraid to reinvest elsewhere. Usually there's going to be another entry point to get back into a project that you sell out of. So we have quite a few knocked out so far, a couple more to go. One thing that I think people really need to spend more time thinking about is being influenced versus being educated. We see a lot of influencers on Twitter, on Instagram, and they usually have some form of agenda, whether or not they have a heavy bag in a project, whether or not they're running a project. So keep that in mind. Are the people that you're following and taking advice from, are they pushing you towards specific things? If so, do they have a motivation to do that? Do they have a large bag of a project? We've seen this before with influencers, projects like Cool Cats and Frenzies, where these influencers were pushing people toward buying them because they already had quite a few locked up and they wanted to drive that floor out and use it as exit liquidity. So don't be influenced. Try to find the people in the space who are providing quality information, who are educating you on how to make some of these decisions and not just throwing you into projects that they already hold a lot of. Okay. So last but not least, and what I think is one of the most important ones, is we need to remember to have fun while we're trading NFTs. There's definitely a lot of money at play. I'm not oblivious to that. But at the end of the day, for the most part, we're grown-ups buying and selling pictures of apes and goblins and cats and all sorts of stupid little things. All right. There's potential in these to grow into, top-notch brands, games, whatever it may be. But we are also trying to have fun here. This is not life or death. This goes back once again to not risking more than you're willing to lose, because that's when it stops being fun. And when you stop having fun with it, what the hell is the point? So those are going to be my 10 lessons I've learned from the last year of trading NFTs. To recap, don't risk more than you're willing to lose. Be careful with your wallet. Take profits on the way up. Become comfortable resisting FOMO. Not all criticism is FUD. Learn to overcome cognitive biases. Don't be influenced, be educated. Create a buying and selling process and criteria. And most importantly, have fun along the way. So that is going to wrap it up for today's show. Once again, please hit that like button, subscribe to our channel, head over to FLOLiO.com, link your account, download our browser extension. Feel free to drop any questions you have in the comments or on Twitter. Love to answer those for you. Love to try to help as many people as we can improve their NFT trading. So for the team at FLOLiO, got a question real quick. Is there a way to track NFT market than just looking at the volume and floor price? You can definitely take a look at the market cap for some of these projects and see how that is progressing. That's one chart that we have up on FLOLiO, is looking at, is the market cap expanding? You can look at the total volume traded. So we've seen for the month of May, it's very deceiving because we are seeing a great total volume for the month. However, that was anchored by the first 5 days when we had the Yuga Labs Other Deeds launch, and the trading around that was massive. So I would take a look at what's been happening over the last 7 to 14 days, because that's going to give you a better view of the overall health of the market. We live in a 24/7 trading space with NFTs. This isn't like the traditional finance market where it's open, Monday through Friday for 6 hours a day. This is nonstop. So things move a lot faster here. Bear markets and bull markets, from a day's standpoint, are a lot more condensed compared to traditional finance markets. So keep an eye on those trends with the overall trading volume across OpenSea and LooksRare. If things are remaining flat for an extended period of time, take a look around and see, what is coming up that could affect that. Is there a really hyped drop that's coming up? And as far as I can tell, nothing huge in the next couple of weeks. Is there an in-person event? That's usually a good indicator as well. We have NFT NYC in the middle of June. Last year, after NFT NYC, we went on a crazy bull run. I'm not saying it's going to be the same thing this year, but I do think that we should expect to see some heightened trading volume after NFT NYC if the projects and the NFTs there deliver an experience that people are excited about. So I think that's a really big opportunity for the NFT space. So with that being said, I am Jeremy. This was Web3 and Me. Thank you for watching. Have a great day, and we will see you on Friday.